Hey traders, I'll try to do a real quick video cap here. I know I got a lot of my charts here. A lot of this is just the market web study, and a lot of these drawings down here are from before the big breakout last week. So we moved basically two standard deviations of the expected market maker move last week. Okay, and this green line right here represents what was expected on the bullish side for the markets on the trend from last week. Okay, we've been currently trading around this other trend here, which seems to be failing so far. We'll see how that plays out and stuff. These uh, Fibonacci retracements, these represent uh, Friday's close and the expected move to the upside on for the bullish side and expect to move to the downside on the bearish side. And what we've done, we've come down twice now and tagged the bearish side of trend, okay, the expected downside bearish side of trend. Now, what I want to point out here is on the bearish side, how if you anticipate where the markets were expected to go last week, okay, and then the bearish side of trend, right here where they cross is right around 765. And a lot of people think we're going to go back to 765. And guess what? That happens on Thursday. Okay, that cross. So this is one of my very top watches and thesis that come Thursday that we are going to tag this 765 cross. So this is definitely something I want to keep in the back of our minds going into the rest of the week here to get that 765 back test on Thursday this week on this cross. So that would be a very important thing to keep on watch here this week. Okay, so that would be my primary thesis, scenario one for a bullish move. Scenario two is now that we've tagged this downtrend and we're rallying this morning. If you all-time highs is right at 7,800 on the SPX. Okay, guys. So now if we do rally, we are inside of this accelerated green trend uh, for the SPY. So we could actually, scenario two would be a double topping formation possibly today into that 7,800, and we would be, and then start walking that green trend line up later on this week. So that would be the really bullish scenario for the week. Okay, so those are two big scenarios that I've got on watch this morning, going forward today. Okay, similar situation here on the Qs, guys. This was the expected trend on the bullish side from last week. Okay, and this is the downtrend, expected downtrend for the week using the market maker move. Those things cross here later today. So right into the close, going into tomorrow, we get a cross on that scenario, and that's also the daily 20 SMA. Okay, so we definitely got to keep this on watch going forward. A possible back test of the daily 20 into the close today, into that, uh, and resetting back to what was expected to be the expected move for the week last week. Okay, so definitely keep that on watch. Similar situation as the S&Ps. Uh, if we go back to highs from last week, that would put us inside of the accelerated uh, expected move, trend. Okay, which would be setting up a move, breakout move to new all-time highs. Okay, so those are my two scenarios going forward here. Similar, but I still think there's more uh, downside. The downside thesis seems to me like a more likely scenario. Okay, the IWM now. We're already moving past the cross scenario from on IWM here. Okay, so this here is giving us a negating that scenario one, which I was mentioning with SPY and NDX. Okay, so we're already not satisfying that. The cross technically hit about 6 a.m. this morning. I'm doing this video around 7:21. So let's definitely keep that in the back of our minds here, that the bearish scenario is not playing out in IWM already, suggesting maybe that thesis is not going to play out across the board. So let's definitely keep that one on watch. Okay. And then on the bullish side, we can very easily now go into these range highs from last week. For the expected move is much higher, a breakout move above last week's highs now. Okay. So if we break out from here, then we have to target the 50%, which is definitely in range here on Wednesday. So the 50% here is definitely in range around 1 o'clock this afternoon. So that's definitely another scenario that we could have end playing out today, the 304.18 on the bullish side. Okay, but yeah, the bearish side, the bearish scenario technically is not looking likely here on IWM early on this morning. Okay, so resetting into the trend from last week, diamonds look like the most likely scenario that this could play out. It looks like the cross could actually hit between Wednesday and Thursday's overnight session. That's where that cross is landing today. And so far, we're awfully close to it. So this is definitely, and that's right here around the 50%. Also on the downside. So maybe one last leg lower here for the diamonds for a potential reset down here. So the diamonds is supporting that bearish thesis scenario one. Okay, and we'll go from there. That's all I can say. We get that scenario, and then we will see what happens from there going forward here. Okay. Okay, guys, just remember we do have a 10-year auction today. The last really bad auction that we had happened a few years ago. Hackers had shut down the automated processing system, and basically they literally had the banks had to have a runner go from the bank down to the treasury's office to place orders to on the for the auction, and that takes time and stuff, and the auction is just a limited time period. So we had a really bad auction because of that hack. Since then, I'm pretty sure they put safeguards in and stuff to stop that, but foreign entities had hacked the treasury auctions and managed to get in there and shut it down to where it couldn't be processed. Yesterday we had a really good 3-year auction. So I would be very careful thinking that this is going to go. Remember, when they go down, then the yields go up. So we've painted ourselves into a corner for a potential squeeze higher setting up here. So let's be careful here. This right here has been a support. We'll see what see how this plays out. We're in a downtrend, so we cannot deny that. Okay, so let's definitely keep that on watch here. And if you go out here on the monthly, 20-year monthly, and we're down into these levels down here. It has gotten worse, but we're a little bit painted into a corner here, guys. So the chances for a bounce are there. Okay. This is a downtrend line here, extend to the right. Okay, so and then on the monthly we've got this right here, bottom of that, and that 5 SMA right there. I would say there's a pretty good chance that we come back up to that we bounce here on the treasuries in today's session if you look in the monthly. Okay, so be very mindful of that, and that would be bullish to market if that likely bullish the market if that were to play out. So let's be very careful here, trying to think that uh, it's all over with, and uh, you know, so we're breaking out. So we have this. We're not completely breaking out yet. So we do have an inverse head and shoulders. If we put an let's say go right here. Okay, guys, go back to that monthly now. Guys, look at that. The measurement takes us right into that monthly 5. So let's definitely hit that and watch. If we bounce here back into the monthly 5, that's not a bad idea. I didn't even look at the weekly time frame. Yeah, look at this right here. The weekly 5, we're actually right there trying to break out above the weekly 5. So that would be a bullish indicator if we break above the weekly 5. So guys, I mean, the weekly, uh, yeah, I still stand by that idea that we're going to bounce on this auction today. So let's keep in definitely. We're getting above the daily 5. Uh, uh, can't remember which one that one is. Oh, the red one's daily 50. I'm sorry. Daily 20 is the pink one. I'm sorry. So daily fit. That's the so that on the S&Ps earlier I was showing you the red one. That was the daily 50 on the S&Ps. Okay, let's keep this on watch here. The T-bills could be set for a big bounce, and that would be setting up for a rally in the markets.